It's Hannah, the owner of Hannah Murrell & Associates at Keller Williams, your real estate advisor for life. Here is your local market update. What's going on in the real estate market, interest rates, and inflation. We're gonna cover it all. Let's talk about the elephant in the room, mortgage interest rates. We are just now getting back to a new normal, which is between 6 and 7%. And in 75 years, that is the average that we see. Officials haven't raised rates 3 percentage points in a single year since the 1980s, and they're not done yet. The feds have stated 2 additional rate hikes before the end of the year, signaling plans to lift another 1.25 percentage points. With 2 meetings left, they are expected to raise 75 basis points in November, followed by a 0.50 point increase in December. Why are they doing this? Well, it's to curb inflation. The Federal Reserve's job is to keep inflation in check and to help the job market grow as much as possible. Inflation has now soared to hazardous levels, and the top tool for feds is to raise interest rates to affect buying power. In COVID, we saw low interest rates to help pump the economy in order for households and businesses to invest in new projects, hire staff, take loans out, etc. Higher interest rates are implemented to pump the brakes on consumer demand. Inflation happens when supply and demand are out of whack. The feds can't do anything to help with supply, so they can only help with demand by raising interest rates to bring the demand down. Inflation was 8.3% higher in August than the year before. Normally, feds aim for just 2%. It's working. More houses are sitting on the market, and mortgage applications have hit their lowest since 2016. What are we seeing right now in our local market? Well, inventory was down 3% in August, but supply was up 9%, which means sellers are putting a pause on selling and more buyers are putting a pause on buying. Sellers are overpricing, thinking they can price their home like last year, and this is causing homes to sit, which is why inventory is increasing, as well as the higher interest rates affecting buyers' purchasing power. The reality is that for a seller, home prices are up 16.4% from last August. So pricing your home in this market strategically, conditioning and staging it for sale means you can get a higher price than we've ever seen before. On average, we are seeing homes sell 2.1% higher than list price, which is actually down 1.1% from last year. But because home prices have appreciated at a whopping 16.4% since last August, you are still getting more for your house than you would have ever last year, even with homes not selling for 3.1% above list price like last year. Buyers, this is important to you because days on market are increasing every month and supply is up 9%. This means price reductions are more frequent and there are now more strategies to negotiate a great deal. Let's talk about what we're going to see more of as the market continues to shift. With the market shifting, you now have more options to negotiate a great deal. And what I mean by that is not having to buy a home as is, potentially asking the sellers to pay your closing costs, asking for decorating allowances to cover updates like carpet, paint, or any other repairs that need to be done, and offering less than list price will all contribute to being able to have a great deal. Well, you may be asking, why would we buy with soaring interest rates? Well, as I mentioned earlier, this is the new normal and life still goes on. People still get relocated, babies are born, financial pickles are a reality, and sometimes selling and buying a different home is the best option. But there are some programs out there that can ease you into the current going interest rates. First and foremost, a program we are very excited about and not a lot of buyers know about is the 2-1 buy down. For example, on a $400,000 house, this could save the buyer $10,000 in their monthly payments in the first 3 years. That's $277 a month. And of course, the more you finance, the more you'll save. Please note that your specific savings would be 100% dependent on your loan amount and interest rate provided by the lender. Here is the info if you want to learn more about this program. This program allows you to get an interest rate that is 2 whole percentage points below the going rate for the first year and 1 percentage point below the going rate in the second year. For example, you would have a 5% interest rate year 1, a 6% interest rate year 2, and a 7% interest rate year 3. The reality is that by the time that you get to year 3 and have the going interest rate for today, the market would have shifted and interest rates should have lowered, allowing you to refinance to a much lower interest rate. Additionally, people normally don't stay in their home too long, so you may end up moving after you reach that interest rate or maybe close to moving. You still have to be able to qualify at that higher rate, but it is a program to ease you into that higher interest rate. Your first year, you have so many expenses that are going into buying that first home, second, third. Your down payment, closing costs, repairs, furniture, decor, moving costs. The list kind of goes on in that first year. So by year 3, you're in a much better position and better equipped to handle the higher mortgage payment. There are a plethora of mortgage options available, and a professional mortgage lender would be happy to discuss what's best for you and your specific financial needs. Some other mortgage options include an awesome program for CPAs, engineers, professors, lawyers, veterinarians, pharmacists, and PhDs is a 0% down payment program with no premium mortgage insurance. If you're a physician out there, there are special loan programs for doctors. In Missouri, there's a 0% down first-time home buyer program that gives you your money for your first down payment and your closing costs. There are also 3% down payment programs out there for people who have not yet purchased a home or maybe who haven't purchased a home in 3 years. There are so many options out there. Make sure to talk to your preferred lender. Hopefully you've enjoyed this market update. The takeaway is that the market is still shifting. Home prices will start to cool off, interest rates will rise, so now is the time if you're looking to sell and buy. Tune in monthly for your local market update. I'm Hannah Murrell with Hannah Murrell & Associates. Have a great day.